Thanks to the Morgantown Area Partnership for letting us talk for a few minutes today on the CARES Act. I'm going to try to hit most of the act at a high level. Try to focus the front end of this presentation on stuff that may get cash into your hands sooner rather than later, although as we'll talk about, that's kind of up in the air the longer this goes on, based on funding that's available. And of course, guidance is changing almost daily. So most of this is going to be at a very high level. A lot of these topics, you can spend 30 minutes talking on by themselves. I've had phone calls for 30 minutes just on the Paycheck Protection Program with friends and clients, and then of course, all the various nuances that dig down into the details. So with that, let's kind of jump in. I'll let you know a little bit about who we are. So Suttle Stalnaker is a West Virginia-based firm. We have 3 locations: Morgantown, Charleston, and Parkersburg. We do pretty much everything under the sun: tax planning and prep, entity and formation planning. We have a small business department that does client accounting services, bookkeeping, payroll. And the past 3 weeks have been crazy trying to help people calculate paycheck protection payroll numbers and working through the various credits and all this stuff. And so we're kind of been in the midst of all that. And we do a whole lot more. We do audit and attest and all kinds of things. But that's a little bit of who we are. Just throwing that out there. So with that, let's jump right in. The CARES Act, Coronavirus Aid, Relief, and Economic Security Acts, passed on March 27th. It seems like it's been much, much longer than that, probably because we've all been in the house or some form of isolation for weeks now, but it's been about 3 weeks. And it changed a lot, and it changed a lot really fast. And then with the guidance that keeps coming out, we actually had some yesterday, the day before, related to individuals for the Paycheck Protection Program for self-employed people. As it changes, it seems like there's just more stuff we're having to work through each and every day. So keep your eyes and ears posted. Hopefully your CPAs are reaching out to you and keeping you apprised of everything that's happening and all the changes that are coming out. The CARES Act touched a lot of stuff. This kind of hits all the major bullet points. I'm probably going to touch on most of these to some degree, some more than others, mainly because I wanted to focus on small business related items and what's going to get some cash in your hands. We're all aware of the individual rebates. They made some changes to retirement plans and RMDs. There are some changes related to charitable contributions, medical expenses. There are 2 credits that are available immediately that I do want to talk about here on the front end, a couple slides in, that may get some cash in your hand pretty quick when you start filing your quarterly payroll reports. Then, of course, they did change to paid sick and family leave stuff, and there's some credits available for that. And then there's some other miscellaneous related business items for net operating losses, interest expense. And then, of course, the Paycheck Protection Program is a big one. And then they changed some other things related to qualified improvement property. So first thing I'll touch on, and some of you guys may have already received this in your bank account. I'm not going to spend a whole lot of time on it because it's been out there in the news a lot, but is this individual recovery rebate. From a business perspective, it's going to give you a little cash, but really not a whole lot to do much within your business. But it will help personally if you're struggling. Getting that $1,200 per individual, $500 per child. Some payments have already started. Mine came a day or 2 ago. It is based on your 2018 return if you haven't filed 2019 yet. If you have filed 2019, it'll be based on your 2019 return. There is a phase out threshold if you're single. If you file as a single person, you start to phase out and lose that credit at $75,000. If you're married filing joint, starts phasing out at $150 and tops out at $99,000 for singles and $198. You kind of lose that, assuming there's no kids. You start to lose that credit completely. So it's $5 for every 100. The way this will work is it's actually a credit for 2020. And so when you file your 2020 taxes in 2021, the credit will be quote unquote trued up. And so what that means is if you're like, Ryan, like I made good money in 19, but man, 20 is going to be looking rough. Well, they're going to take that into account. If for 2020, when you file, if you drop back under the phase out thresholds because things just really didn't go well, they're going to allow you to take that credit that you may not have got in advance. So right now they're giving you advance on the credit as wise everybody's getting checks in the mail and direct deposits. When you file your taxes in 2021, If the results of your 2020 income put you now below that threshold, they're going to allow you to pick up that credit on your return when you file. So don't feel like all hope is lost. You will get it eventually. It just won't be a check in the mail currently. And if 2020 goes great for you and you actually end up over the threshold, I have some clients whose 18 stuff allowed them to get the credit. 19, they would have been over. 20, they may be over. If when they file 2020, you shouldn't have got the credit, they won't make you, at least at this point, they won't make you pay it back. It's reduced, the credit's reduced, but not below zero. So they're not going to make you give the credit back should you get the money. And then when you file 2020, you should not have in their eyes. If you or you know somebody that has no income, or they didn't file in 2018 or they didn't file in 2019, and they're concerned about, well, how am I going to get my money? What am I going to do about getting my piece of the pie? Don't worry about it. They've thought of that. If you get Social Security, they actually are going to use a 1099 SA to kind of track everybody down and make sure they get their money. If you have not filed, or you know somebody that hasn't filed that didn't make enough money, or they weren't required to file, there is a special website just for those individuals, and I've put that here for non-filers. And it goes through the mechanism of asking for some personal information. It's kind of like a easy, free file, short tax return is essentially what it amounts to. And then when you do that, they'll now have your information and know where to direct deposit the money to, and hopefully it'll start the process of getting your way. If you do get the money, or you thought you should have got the money and it doesn't show up, they're supposed to send you a letter within a few weeks of the money going out to your last mailing address that they have on file to let you know, hey, we sent you money, this is where we sent it, and if you haven't seen it, please let us know. So if you think you should have got it but you haven't, look out for that letter in the mail. All right, so first item that may allow you to get some cash to help your business out is going to be retirement plan distributions. So if you have a 401k plan, or you have an IRA, and you're running a business and you need some cash, this may be an option to get some money out. They have removed the 10% penalty on early distributions. So normally, prior to the CARES Act, if you took a distribution out early, you hadn't reached the kind of the normal retirement age, you got hit with a 10% penalty on taking that money out. Under the CARES Act, they have removed that 10% penalty related to coronavirus related distributions up to $100,000. So that will allow you to take out up to 100 grand that you can use to cash flow the business or for expenses. These distributions are made between January 1st of 2020 and the end of 2020, and they can be taken from IRAs or defined contribution plans. So think of a 401k. If it is from a 401k plan, so if you have a 401k plan for your company, the plan must allow for in-service or hardship distributions. Not all plans do allow for in-service or hardship distributions. Some of them just limit it to retirement age. And so if the plan doesn't allow for in-service or hardship distributions, it can be amended to allow for these types of distributions, but management will have to kind of work through that process to make sure these become available. And the key to these is that those payments, in order to be able to have the 10% waiver of the penalty, they have to be made to a qualified individual. And I'll clarify what that means in the next slide. But I did want to quickly note that if you do take this distribution, let's say to cash flow for a couple months until all this passes by, you are able to recontribute that money within 3 years back to this same plan or another qualified plan, and it'll be deemed to have been rolled over timely, which normally that's subject to 60 days. So if within 3 years, let's say you take out 100 grand, if within 3 years you're able to put that 100 grand back, they'll determine it not to have essentially have been rolled over, and it won't be a distribution that's taxable. If you take the money out and you're not able to contribute it back into the plan, they've allowed some flexibility on how you have to recognize the income. And what they said is you can recognize the income ratably over 3 years. So it doesn't have to be a 1 year hit in 2020. It can be recognized over the next 3 years. And the reason is because when you take out distributions from a qualified plan, since it's put away kind of pre-tax, you still have to pay taxes on the money when it comes out. Now you're going to save the 10% penalty, but the rest of it's going to be taxed at your marginal rate. But what they're saying is you don't have to you don't have to pick up that full amount in year one. Let's kind of spread that out over the next few years so you don't get hit by a big tax bill this year trying to keep your company afloat and pay for living expenses. Now, I mentioned that these had to be made to a qualified individual. Qualified individual is defined as someone that has been diagnosed with the virus, somebody that has a spouse or a dependent diagnosed with the virus, someone who experiences adverse financial consequences as a result of being quarantined, furloughed, laid off, reduced hours, or someone who's unable to work due to the lack of childcare due to the virus. So it's pretty broad. It's not just for people who get the virus, although those are specified. But if you have been laid off, or if you have employees that have been laid off who need to take these distributions, or they're quarantined or something, this becomes available. Same thing if schools are closed and you can't work because you have to stay home to homeschool your kids for a while, and you can't work. That becomes an eligible reason as well. And from an employer perspective, they've said that you can actually rely on the employee's self-certification that they meet one of those 4 criteria. So it's not one of these things where they have to prove it to you. You may be well aware because you may have laid them off or aware that they're at home for the kid because they work for you. And so you may know, but in the case where you don't know, a certification from the employee that, yeah, hey, I'm having to stay home, or my husband or wife has this virus or whatever, you can rely on their certification to determine that they're eligible for this. The second option, if you don't want to take the distribution out, you're kind of worried you may not be able to repay it, or you just want to work through the process of kind of putting the money back in the plan over time. They've actually allowed for retirement plan loans. They've increased those limits as well. So normally retirement plan loans are limited to the lesser of $50,000 or 50% of your non-forfeitable balance, which is called your vested balance. Under the CARES Act, for 180 days, starting on March 27th, 2020, they've increased the loan limit to the lesser of $100,000 or 100% of your vested balance. Now, same thing with distributions. You can only take a loan if your plan allows for loans. And this can be amended in the plan, but if your plan does not allow for loans, you obviously can't take them out. If your plan does allow for loans, however, this will give you the opportunity to take out up to $100,000, which you will then pay yourself back over time. After this all passes, you can kind of start paying that money back in. Again, this is for a qualified person, same definition as the previous one for distributions. And payments on these loans, or loans that were outstanding, but payments that are due between March 27th and December 31st, are delayed for a year. So even if you do have to take this distribution out, what they're saying is you don't have to start paying on this until next year. So it's not one of these deals where I got to take out $100,000. Well, now I got to figure out how to pay this loan back to myself immediately, and I'm already struggling with cash flow. They're saying, no. You take the money out, you take care of your business, and then a year from now is when your repayments are going to start. So the next item is available immediately, and there's 2 credits we're going to talk about next, which are great in my opinion. There are some caveats. There are some timing items related to if you've gotten a Paycheck Protection Program loan, related to when that may be forgiven. But I do want to talk about these because you can start getting these immediately if you're eligible. And you can essentially keep the cash you would be sending to the feds for payroll taxes. You can kind of keep those back in-house to continue to pay for operations. So let's walk through those. So the first one's going to be the employee retention credit. It's a refundable tax credit against certain employment taxes, and we'll cover what those are in a minute, equal to 50% of the qualified wages an eligible employer pays to employees after March 12th and before January 1st of 2021. So you're going to get up to 50% of the wages, and we'll cover that in a second too, that you pay to employees. Now, you're not eligible, this is one of those catches, you're not eligible if you do end up getting a Paycheck Protection Program loan. So if that's still up in the air for you, you've applied, you haven't got it yet, you're not sure what's going to happen, or you're not, if you weren't aware of the Paycheck Protection Program, you haven't started down that road yet, this may be an option for you. But if you do end up getting a Paycheck Protection Program, this credit becomes no longer available. However, as we'll talk about later, if the Paycheck Protection Program loan money runs out and you're not able to get one, this credit is going to be key for providing you some cash as you go forward. So just make note, if you do get or you have already received a Paycheck Protection Program loan, you can't get this credit. However, don't zone out because you may have friends or family that could use this. So an eligible employer is an employer which includes tax-exempt organizations if they did not get a Paycheck Protection Program loan, and if they operate a trade or business during 2020 and experience any of the following. If they have the full or partial suspension of operations because of government orders limiting commerce or travel due to COVID-19, if they have a significant decline in gross receipts, which is defined as greater than 50% reduction in quarterly receipts measured from this year as compared to last year. So if you have to close or suspend operations, whether that's fully or partially because of COVID-19 and related restrictions, or if your business has dropped off more than 50% over the same quarter last year, you are eligible. And this credit continues until the quarter after the quarter where your receipts are back up to 80% of the corresponding 2019 quarter. So you're gonna be eligible to take this 50% of employee wages as long as your gross receipts are less than 80%. Well, they have to meet that 50% threshold first, but if they continue to be that low, you're going to keep being eligible for this credit until you reach 80% of the previous quarter. And there's going to be some calculations involved, and working with a CPA or an equivalent, somebody internally, CFO or controller, to kind of work through some of these numbers is going to be key. Qualified wages. So if you have less than 100 full-time people, qualified wages are essentially up to $10,000 per employee. So if you're under 100 people that you employ, you can use up to $10,000 per employee as qualified wages. Now you get 50% of that as the credit. So that last bullet point on that slide there is kind of what you need to keep in mind. I can claim up to $10,000 per employee, which means I get up to a $5,000 credit per employee that I'm continuing to pay during my reduced or suspended operations. And this is regardless of whether they're actually working for you or not. If you're continuing to pay them, it counts. If you're over 100 employees, only those wages paid to employees who are furloughed or face reduced hours as a result of your closure are eligible. So if you get over 100, it's not everybody anymore. It's only those people you're still paying that are furloughed or face reduced hours that count in this calculation. And then wages do not include those that are used to determine a credit under the Family First Corona Relief Act that are paid for the required sick and family leave. So if you're having to pay employees because they qualified for that sick and family leave because they have the virus or somebody in their family has the virus and they have to be out for those 2 weeks, those wages that you're paying related to that don't count in this credit. These are for normal wages paid to normal employees, kind of under quote unquote normal circumstances. So if you're having to pay that extra sick and family leave, those wages don't count. There are also some other small nuances, but since we only got 30 minutes, I don't have time to go into everything, but just know this is available and out there. And this is kind of how the mechanism works. So say, Ryan, I'm paying employees, continue to pay employees that are either staying home or we're just working a lot less, but I'm trying to keep my people employed. How can I get some of this money back? And the way that it works is, in anticipation of claiming the credit, they're going to allow you to retain a corresponding amount of 941 taxes that otherwise would have been deposited for all employees, including federal income tax withholding the employee's share of Social Security and Medicare, and the employer's share of Social Security and Medicare taxes for all employees up to the amount of credit, and you won't have a penalty. So if you say, sweet, this is a great credit, I'm not getting the payroll protection program, you know, I have $10,000 I want to go ahead and start claiming, they're going to let you hold back and not send in employee income tax withholding, employee Social Security and Medicare withholding, and employer Social Security and Medicare withholding. They're going to allow you to keep that money and not send it in to offset that kind of credit you're due. Now, if you say, Ryan, I don't have to, I need the $10,000. I'm due $10,000 in credits, but I'm not, my 941s aren't nearly that much. I'd love to have that money now. And it's going to take me like, 3 quarters to get that 941 tax back. There's a way you can request an advance, and it's on form 7200. So if you're like, hey, my credit that I'd love to get now is more than my 941, there's a way you can claim that as well using form 7200 to kind of get that credit now, as opposed to waiting till you keep filing 941s and getting a piece of the credit here and there. And we do expect, and it's kind of been thrown out, that the second quarter 941 is going to be adjusted. They're going to change the format and the information included on there. And it's going to include some of this information. So eligible employees are going to report their total wages, related health insurance for each quarter, starting in the second quarter to help determine this credit. So right now, for the first quarter, there's not really an easy way for them to capture this information. You need to keep the records for sure in case they question it. Second quarter, they're going to revamp the 941 to start including some of the information in determining this credit. So before we move on to the next credit, just keep in mind, this will let you keep back all employee federal income tax withholding, Medicare Social Security, and employer Medicare Social Security for up to 50% of employee wages, up to $10,000. It's $5,000 per employee. The catch is you can't have received a Paycheck Protection Program loan. Okay. So here's the second credit that's going to kind of keep some cash in your pocket. Employer payroll tax payment delay. So the CARES Act allows employers to delay the payment of certain 941 taxes for liabilities due from March 27th, which is when the act passed, through January 1st of 2021. This is eligible for the so different from the previous one we talked about. This is for the employer's 6.2% share of Social Security taxes only. So only for the employer's portion of Social Security taxes. You can hold that back, so you don't have to send it in. They do make you repay it, so this one's kind of like a loan. It's not really a loan, but it's just essentially deferring the Social Security tax. They're going to let you keep back your portion, the employer's portion of the Social Security tax, and then you have to pay that back by, so 50% of the amount you withhold or keep back is due by 12/31 of 2021, and the other 50% is due by 12/31 of 2022. So they're saying, okay, for right now, if you guys need the cash, you keep back your portion of Social Security, 6.2%, and just make sure you pay us back by the end of next year, 2021, and by the end of the year after that, 2022. So again, it's not one of those deals where once this all blows past, they're going to make you kick the money back in right away. They're letting you really stretch out how soon you have to send this money back in to the end of the next 2 subsequent years. This is available to everyone now until after your Paycheck Protection Program loan is forgiven under the CARES Act. So if you haven't applied for a Paycheck Protection Program loan, this is available to you right now. If you have applied for a Paycheck Protection Program loan, this is available to you now. If you've received a Paycheck Protection Program loan, this is still available to you now. However, once your loan is forgiven, you can no longer defer these payments. So you can defer Social Security, the employer's portion of Social Security, up to the point that your Paycheck Protection Program loan is forgiven. And at the point it's forgiven, you can no longer defer these Social Security taxes. So if you need to keep the cash back, you don't want to send it in, this is for you right now, assuming your Paycheck Protection Program loan hasn't been forgiven, which I don't think anybody is, because Most people have either just received their money or received their money maybe within the last week or still waiting on it. Hold back that Social Security tax, keep track of it, make note that you need to send it in by the end of 2021 and in 2022. And then at such point, your loan is forgiven. You have to stop deferring the Social Security tax. So like we just talked about, the employer payroll tax abatement or payment delay is you're no longer eligible for that once you receive the forgiveness of your Paycheck Protection Program. Not when you receive the loan, when it's forgiven. You can reduce, in order to get this, you can reduce your 941 deposits to keep back your share, the employer's share of the Social Security taxes without penalty. Again, without penalty. Both these are saying, hey, if you keep that money back, you're not getting hit with a penalty for not sending it in. And then same as the last credit, we expect changes on the second quarter 941 that'll help capture some of this information to report to the IRS so that they know people are taking these credits and how much. There is also available a credit for the paid sick and family leave credits. So prior to the CARES Act, the Family First Coronavirus Response Act was passed, which required employers with fewer than 500 employees to give employees sick or family leave up to 80 hours related to COVID-19. So hopefully everybody's aware of that. They even issued a little poster you're supposed to hang up in your place of employment to let people know that this was a thing. But what they're saying is, hey, since we're forcing you to do this, to provide up to 80 hours if somebody gets COVID-19 or a loved one, a spouse, or a dependent gets COVID-19, we're gonna provide you with a credit to kind of recoup this money. And so that credit's also gonna be applied against certain credits for payroll taxes. And the CARES Act allows that to be what they call provided for advanced refunding. So kind of get that now rather than later. And so similar to the employee retention credit, this credit for the amount you paid for sick and family leave can offset your federal employment taxes up to the amount you paid employees. So if you're having to pay employees $10,000 because they were off related to this COVID-19 thing, they're going to let you recoup a credit against your employment taxes for the amount you paid those employees. So at first it was like, oh my goodness, I have to pay employees and I'm already, hurting on a business perspective. And the government's saying, no. When you file your taxes, you keep that money back because we know you're having to do this. Don't pay us, use that to pay your employees. And you can request an advance for the amount you paid. So again, if the amount you paid exceeds your 941, there's a process and a mechanism to request an advance for that excess. So again, my 941 is only $5,000. I paid 10 grand. How do I get that other $5,000 back so I can keep things moving along? You would want to check into this advance payment for the excess amount that you want to recoup. All right, Paycheck Protection Program. Hopefully everybody on this call is aware of this. It was a big deal as soon as it was released because it's essentially free money. And of course, as people found out about it, everybody was interested and the banks became overwhelmed. I'll hit you have the high points because everybody should be aware. If you're not, this will give you a good overview of what you need to look for, maybe talk to your bank about. But do know that a lot of people are aware of this, and I think I read on the email this morning, over 1 million, maybe 1.5 million people have already applied for this. So the funding's running short. There was $349 billion set aside for this program, and it's already reaching that point. So what this program does allows you to borrow up to 2.5 times your average monthly payroll. There's a specific calculation for that, mainly based off 2019. For use on qualified expenses for the 8 weeks after you get the loan. So they're going to give you 2.5 times your average monthly payroll to use on qualified expenses, and we'll cover those for 8 weeks after the loan. This is open to businesses with less than 500 employees, includes 501c3s, nonprofits, veterans organizations, travel businesses, and self-employed individuals. So if you're a 1099 contractor or you're a self-employed individual or you file Schedule C, you count too. It's also open to churches. I think there was a question initially about whether or not churches are included, but they are. And it's eligible for 100% forgiveness. And that's why it became a big deal. Because people were like, you're going to give me 2.5 months of cash flow, and then you're going to tell me I don't have to pay it back? Bring it on. So normally the cancellation of debt, which is what debt forgiveness would be, would result in income. So in the normal tax realm, if you owe money and then somebody says, you know what, don't worry about it, you don't have to pay me back, the IRS makes you pick that up as income to you. Under the CARES Act, they specifically carved out the amount like this program, that if you're forgiven this debt under the Paycheck Protection Program, you don't got to pick it up as income, which is even better. You know, you're going to give me money, you're going to tell me I have to pay it back, and I don't have to pay taxes on it once you forgive me. That sounds great. So the forgiveness aspect is equal to the sum of the following costs during the 8-week period following the date you get the loan. So you can use these funds to pay for payroll costs, which need to be at least 75% of the amount you spend. And you can use the money to pay interest on mortgage obligations of the business, rent payments for the business, utility payments for the business. And they also calculate the forgiveness based on your employment level. And so there is an employment calculation involved, because the whole point of this was to protect paychecks, which is where the name came from. So they want you to keep your people employed. So the calculation at the end of your 8 weeks is going to be determined upon, or do you still have the same level of employees? And there are some exceptions, just like everything, and there are some dates, ranges where you can pick from. There are some nuances, but in this short time presentation, I just want to give you the highlights. But there are some nuances that you're going to have to work through either internally or with your CPA to make sure you're calculating everything right and you kind of know what you should expect from your forgiveness aspect. But essentially, it's based on employees. If you start this process with 6 employees and you end this process with 6 employees, full-time equivalents, 6 full-time equivalents, start at 6 full-time equivalents, and you end with 6 full-time equivalents. That's a 1-to-1 ratio. You should be eligible for 100% forgiveness, assuming you spent the money on these 4 things and you didn't spend more than 25% on non-payroll items. And again, like I said, there are some nuances. There are some exceptions. Ryan, I laid people off and I brought some back. Yes, there are some special circumstances for that. So make sure you question your CPA or your internal person as you dig into this to make sure you're calculating all this right. I will note that I'm sure they foresaw people going, oh, I can go ahead and buy something now or start a new utilities or maybe up my rent or something and pay for some of these things. So the rent, utilities, mortgage interest all had to be in force before February 15th. So none of this sneaking in new rent payments and utility payments. It all had to be kind of around by February 15th, which was before they even passed this law. And then mortgage interest must be the liability of the borrower, so the business owner, and it must be on real or personal property, and again, has to be incurred prior to February 15th. Funding, like I mentioned at the onset of this section, funding is running low. A lot of people knew this was coming. It's, like I said, it's kind of free money, and so funding's kind of hitting that limit. There is talks of trying to get some additional funding, a second round of funding, but it's still up in the air. Congress is still working through it. They're debating it. They're figuring out how much and when and if it's anything they want to do. So right now, $349 billion is what it's capped at. When they hit that limit, it'll stop unless they bring in a second round, which is being discussed but hasn't been finalized. So now I'm going to hit a couple other things. Those first few items we talked about is really cash now. Cash now in my pocket, the easiest way to do it, offset 941 payments, get some cash from the stimulus money, get some cash from the Paycheck Protection Program. These other items I'm going to talk about are going to be, they're going to require a little bit of work on your part, either filing them into taxes or adjusting 2019 before you file. But I want to hit them anyway because there is some opportunity there to go back sometimes to prior years and go ahead and request a refund for some of these items we're going to discuss. But it's going to take some work and you have to coordinate with your CPA, your tax preparer. So the first thing I want to talk about is net operating losses. So prior to the CARES Act, they limited net operating losses to 80% of taxable income, and the excess had to be carried forward. So the CARES Act temporarily removes that 80% limitation for tax years prior to 21 and allows the NOL to fully offset income. So you could take a loss up to 100% of your taxable income. And then beginning in 2021, you get 100% deduction for net operating losses for years prior to 2018. But then for years after 2017, it goes back to the kind of the old rule, you get 80% of the deduction for years after that. And they also allowed you to carry back net operating losses in tax years after 2017 and 2021, 5 years. So if you did have a net operating loss that had to be carried forward, or you hit that limit and you want to go back and recoup the rest, but you're like, Ryan, 2019 I didn't have any income and I was gonna have to carry this forward. Well, great. If you had income in 2018 or 2017, now you can carry this. You can say, hey, I had this loss. I'm gonna choose to carry it back to the years I had income and offset that income and get my money back, get a refund of the amount I paid in. So again, you're gonna have to, this is gonna be a coordinated effort with your CPA or tax preparer to kind of talk through, okay, what years did it have net operating losses? What years did it have income? Is this an option for us? Okay, it is an option for us. What's the kind of the cost of these amended returns versus what maybe a refund be? So kind of a cost benefit analysis. And then you're going to be at the mercy of, okay, I'm going to amend these returns and I should be getting a refund back. How long is it going to take me to get my refund? Would be the next question. So it may be cash in your pocket, but it may take a little while for the IRS to process it. Second item, similar excess business losses. So prior to the CARES Act, non-corporate taxpayers, so individuals, were limited to losses of their aggregate trade or business plus $250,000 or 500 married filing joints. So essentially, kind of like the net operating loss, you could take losses up to your business income and then another 250 a single or 500 married filing joints. So if you had an $800,000 loss, and that was after you had hit all of your income, you'd only be able to take 500. The extra 300 would have to be carried forward, which is what that second bullet says, and carried forward to the next year. But the CARES Act changed this rule too and said that if you have excess business losses under the old rule arising in 2018, 19, or 20, they can be fully deducted now. So there is no cap of 250 or 500. You can take the whole thing in the year it happened instead of being limited to the 500,000. If you have losses going forward, so starting in 2021 to 2025, they're still subject to this rule of the 250 and 500. And then there's also some technical corrections. So similar to the net operating loss, this is one you're going to have to coordinate with your CPA or tax preparer to say, hey, was I subject to this excess business loss limitation? And if so, will it benefit me to go back and amend 18 or 19 or go back to amend a different year to recoup this money or get me a larger refund? And then it's a cost benefit. How much is it going to cost me to amend my returns? And then how much money am I going to get back, and does it make sense? Interest expenses, the Tax Cut and Jobs Act of 2017 limited interest expense for businesses to 30% of adjusted taxable income. And there's a definition for that. I didn't include it, but there's a definition. It's not adjusted gross income, it's adjusted taxable income. But the CARES Act changed this too. They increased that limit from 30% to 50% for 2019 and 2020. And you can elect to use your 2019 adjusted taxable income to calculate your 2020 limitation. So if that would give you a better result for 2020, they're letting you elect to use 2019 to calculate 2020 to be able to use more interest expense. There's special rules for partners and partnerships, however. You can only take, you can't take the 50% in 2019. It's only for 2020. But then they kind of gave you a little reprieve saying, you know, if you weren't able to take it in 2019, you get 50% of the excess from 2019. You can treat it as paid and accrued in 2020. And it's not subject to any limit in 2020. So they're going to let you recoup some of that in 2020, just not in 2019. And then the remainder of your business interest will be subject to the 30% limit. So again, this is when you're going to want to work with your CPA or tax preparer to work through, hey, was I subject to this interest expense limit? If so, does it make sense for us to kind of go back and recoup some of this excess, or do I just need to leave it as is? This is another one. Again, you may have to work with your CPA or tax preparer, qualified improvement property. So when they passed the Tax Cut and Jobs Act, Congress inadvertently missed something. So what they did is they grouped qualified leasehold improvement property, qualified restaurant property, and qualified retail improvement property into kind of one bucket, and they called it qualified improvement property, QIP. When they did this, they failed to note that QIP as 15-year property, which would be subject to 100% bonus depreciation. And instead it was considered 39-year property, which is not subject to 100% bonus depreciation. And therefore, when they did that, going forward, anybody who had these improvements had to depreciate these improvements over 39 years. Well, the CARES Act fixed that. And so they retroactively, back to 2017, said, no, QIP should have been 15-year property this whole time and is eligible for 100% bonus depreciation. So you're going to want to call your CPA or tax preparer and say, hey, did I have any QIP? Is this something that's going to affect me? Do we need to go back? Or, and again, this is up in the air. We don't know if it's an amended return thing or if we can file what's called a 3115 and just do a change in accounting method to pick up this extra depreciation. It's kind of up in the air, but you definitely want to talk to them about it, because if you had some improvements in your restaurant or your building or your place of employment, it's worth talking about to go, hey, do we need to change this? And can I get some extra depreciation to offset my income, which hopefully, again, gets me more of a refund. Last couple items. If you're so inclined to help out your employees in this time and you want to give them some money to help offset their education expenses, they have included the definition of eligible items to include loan repayments, student loan repayments. So I'm not going to touch on that a lot, but if you're so inclined or you're already paying education expenses on behalf of your employees, you can now help them pay their student loans. A couple slides on charitable contributions. For individuals who don't itemize going forward, there will be a $300 deduction that they can take. If you do itemize, it'll show up on your Schedule A just like it always has. Do note that for 2020, cash contributions, they used to be limited to 60% of AGI. Now cash contributions, you can take up to 100% of your adjusted gross income. So everything you earned, you can contribute in cash to qualified charities during 2020. Has to be cash. Donor advised funds don't count. You have to elect this treatment, and if you're a partner or shareholder, it has to be treated at your level, the partner or shareholder level. Also during 2020, for corporations, your deduction is increased from 10% to 25% of taxable income. And if you donate food inventory, your deductions increased from 15% to 25% of net income. There are other limitations on how much cost you can count in that deduction. So you definitely want to dig into that rule if that's something you normally do, is donate food inventory. Quick note on RMDs. If you or someone you know was subject to RMDs, RMDs are not required for 2020. So they said, you know what, don't worry about RMDs for 2020. So if you or someone you know is subject to RMDs, you don't have to take them in 2020. Some other quick items. They did change the definition of qualified medical expenses to it eliminates the requirement that qualified medical expenses include only amounts for prescribed medicine or drugs. It increases, it creates a high deductible plan, safe harbor for telehealth services. It created an accelerated credit for the corporate minimum tax, if that applies to you. And if you happen to be involved with aviation, the aviation excise tax has been suspended. A couple other notes on some other things that may help provide some relief. If you have a small business loan, they are providing some debt relief, and they will cover your loan payments, including principal, interest, and fees for 6 months. So if you have an SBA loan, and I've specified there, in particular, a 7A, not the Paycheck Protection Program, another 7A type loan, a 504 or a microloan, the SBA will cover all your loan payments, principal and interest, for 6 months. It's also available to new borrowers. So if you need to dip into the SBA and get a loan to help offset operating costs, even new borrowers who take out loans will be subject to the 6 months loan payment coverage. Last item is going to be the Emergency Economic Injury Grant. So this was related to the Economic Injury Disaster Loan, the EIDL loans. They would give you $10,000 up front while they were processing your EIDL loan that you did not have to repay. So the bad news is, as of this morning, if you go check their website, it's kind of Currently, this idle program is suspended because of funding, or it's kind of up in the air. So similar to everything, people are trying to jump on the various opportunities to get grant money and money to help operations, and this one is kind of hit its limit. So it's still up in the air, but just know there is some opportunity out there. So at this point, I'll take questions. We've hit our time limit, it looks like, but if you have questions, you can post them. I'm going to go ahead and give you, this is my contact information. If you have any questions at all, we've had people that have read the whole CARES Act. Like I said, we have a small business department working through helping our clients from a payroll perspective. Feel free to email me or call any one of our offices and let us know what you're working through, and we'd be glad to help you.
Ryan, thanks so much. Again, this is Russ Rogerson from the Morgantown Area Partnership. We did have a couple questions come through on the chat while you were presenting. I'm not sure that they were answered, but I'll go ahead and ask, and we'll go from there. There was a question about how will the payroll protection loan forgiveness be verified, by Form 941 or otherwise?
So yes, there's going to be specific requirements. And what we've seen on the front end of the Paycheck Protection Program is the information required by bank varies. So yes, on the back end, they're going to request you to provide information proving that you paid payroll and proving that you paid utilities and mortgage interest and rent on the back end to prove that you spent it on eligible items. And they're also going to want you to prove that your employee count, your FTE count. And that may vary by bank. I don't know off the top of my head if there's specific documentation out there yet, but it will be specified when that time comes. Your bank will reach out to you and ask you to provide that information.
All right. Another question we had is from an independent contractor who is a 1099, and they're incorporated as an S Corp. How do they pay themselves with PPP and stay within the forgivable guidelines?
So if you're already if you're already paying yourself wages, you're going to use that wage number to probably have determines. My assumption would be you've used that wages you're paying yourself in your PPP application to determine your 2.5 months of wages. And when you're an S Corp, you still file 941s and you still write yourself paychecks. So I would assume it's going to be similar. The key is, they're giving you 2.5 months of payroll, but they're only giving you 8 weeks to spend it. So more likely than not, you're going to have 8 weeks of payroll costs, and the remaining 2 weeks, you're going to have paid for utilities or rent or something else. If you keep paying yourself as you have been, you should be okay. I'm not sure I fully follow the question, but I would think you'd be okay if you keep processing payroll as you have normally been because you're getting wages.
Let me follow up on that from there. Okay. Also received the question, are employee bonuses during the 8-week period treated as payroll for the purposes of calculating the 75% under the PPP?
That is a great question that I will have to look into. So if you want to email me directly your question, I will look that up.
Excellent. And then another question is, if you had an idle application in before today, will it still be considered?
I do not know that answer either. I just found out this morning when somebody went to the website that they said it was suspended. So I'm not sure from the SBA perspective if everybody in prior to this morning is still in works or where that is. You may get a notification from the SBA directly. I'm not sure.
All right. That's all I have on the chat room. Does anybody else have any questions for Ryan?
I have a question.
All right, go ahead.
My small business is closed due to the governor's order. Our employees are getting unemployment. So we did apply for PPP. If we receive that money, how does that work when people are not working because we're closed, but they're on unemployment?
So if you get the PPP, you will need payroll to pay. a lot, what we've heard. So again, this gets into the nuances of how the forgiveness is going to be calculated. So if you've laid people off and they're on unemployment, thankfully they kicked in an extra $600 per week for people that go on unemployment. So it's helping those. But in order to get forgiveness, they're going to use kind of a front end calculation on employees. I don't know the dates right off the top of my head, but you'll want to, feel free to email me and let me know specifically, and I can give you the date ranges. What they're going to do is they're going to make you calculate on the front end how many employees you have, and then they're going to make you calculate on the back end how many employees you have. So if you have, let's say you had 6 employees at the front end based on the calculation, and you don't bring anybody back during this 8-week period, and so you end the time frame at 0, that essentially amounts to 0 forgiveness. And your PPP loan would then have to be paid back at the term specified, which is 2 years at 1% is the repayment. So your best bet is going to be bring them back. They don't necessarily have to be doing anything. Just bring them back, put them back on payroll, use that money to pay the wages. That'll help you offset the, you'll be spending it on the qualified amounts, and you'll be good to go. But if you want to shoot me an email, let me know, hey, this is what's going on, and this is how many employees we normally have. I could shoot you the dates that they're going to use to calculate the forgiveness, and that way you can have a better game plan of, do I need to bring these people back, or how do I need to go about this?
Okay, thank you.
All right. Any other questions? Certainly encourage everyone to use this contact information for Ryan. Follow up with him. I think obviously, while these programs are very beneficial, having expert guidance through the process is very critical. And we're going to continue with the partnership to try to provide opportunities to have these kind of conversations. And we really, really appreciate Ryan and the Suttle Stalnaker team for helping us out and coming on today to give us a little more detail about what these programs are. Ryan, we will be taking this recording of the presentation, and we will share that on our website so that those who have missed it or want to go back through and listen again for some of the areas that you're particularly interested in, but certainly reach out to Ryan or your accountant to get verification so that you're not what you're doing is actually going to work for you. Is that fair, Ryan?
Yes, there's a lot of, it seems like it changes daily as far as the guidance. So, you know, they put out this CARES Act, and then they left a lot of it to be kind of interpreted and implemented later. And so what we've seen, especially with the PPP program, is almost every day some new guidance came out, or some new FAQs came out, or some new clarifications came out. So you definitely want to make sure you're reaching out to somebody to make sure, A, what you thought was the case is still the case, and that nothing's changed or no additional guidance has come out. And a lot of this stuff is still up in the air as far as, well, what does that specific phrase they used really mean? And different people interpret it different ways. So reaching out to your CPA or accountant, or feel free to reach out to us, is going to be key in making sure you're interpreting it correctly.
Fantastic. All right. Many, many thanks to you and your team. Appreciate the presentation. Appreciate everyone's participation. Also, you're getting some good feedback here on the chat board, Ryan, for doing a great job. And that's awesome. And please keep your eyes on our emails. We're going to try to do more of these virtual learning labs moving forward, and trying to continue to drive some value to our membership and beyond. So thanks everyone for attending. Appreciate it very much, Ryan and the Suttle Stalnaker team. And that's the presentation for today.